Good afternoon and welcome everyone to our webinar on why African families should establish a UAE Foundation. My name is Cheyenne Carvalho and I will be guiding today's discussion alongside our experts. Today we have with us Anissa Boulahia. So as the founder of Dawia Family Office, she provides African entrepreneurs and investors with the strategic support they need to expand globally while preserving their legacy. Her expertise lies in business development, relationship building, and guiding African clients through high-value real estate acquisitions. More than just facilitating business, Anissa is committed to strengthening networks, creating long-term opportunities that position African markets on the global stage. Next up, we have Livin Isabel. He is a commercial director at Okorian. He specializes in corporate structuring, trusts, and foundations, advising both multinational corporations and high net worth families. With 20 years of experience in financial services, including as head of fund administration, he brings deep expertise in asset securing, governance, and transaction management. He also serves as a director and council member, ensuring long-term financial security. So today we'll be exploring how UAE foundations provide African families with a secure and structured way to protect their wealth, ensure legacy continuity, and optimize tax efficiency. We will also discuss the challenges of personal ownership and compare UAE foundations to other existing structure. So let's begin by understanding why own name ownership can pose significant risks. Anissa, over to you.
Thank you, Cheyenne, for the introduction. First, I would like to thank our expert, Livin, for being with us today. Thank you so much, Livin, for being here. And I would also like to thank all the attendees who are joining us through LinkedIn. Please don't hesitate to put your comments and questions on the LinkedIn page while we are on the live. Livin, first question. First, I'll give you some context, if I may. Many of our clients, many of our African clients, when they want to set up newly in the UAE, they ask us to do it under their own name. They want to go fast and they want an easy and cost-effective process. However, as you and I, we know there are a lot of issues that can arise from own ownership. And I would like today to ask you, what are these difficulties and why a quick and cost-effective solution cannot always be the way forward?
Sure. Thanks, Anissa, and welcome to everyone. So let me just go through rapidly the different issues whenever you own asset in your personal name. So one of the main issue is basically asset protection. So asset held in your personal name means that it is part of your estate. Anything happening to you in terms of court case, any challenge, any attack on you personally or claim, the asset that you own is also part of that claim. So that includes investment, that includes the family house, that includes saving for retirement or saving for children. We also have no privacy in the sense that your name appears directly as shareholder of asset of a company. Your name appears directly on the title deed as owner. So this creates certain issues in terms of negotiation. This creates certain issues in terms of governance within the family itself. Why should I study? Why should I work hard if I know that my parents are loaded? So these are the type of mentality that you help curve with privacy. So probate is essentially the process by which assets are distributed after the death of someone. In any jurisdiction, probate is always a lengthy and contentious item. But in UAE, the fact that we have 200 nationalities, more than 200 nationalities, and the layer of Sharia compliance in terms of personal status law add another degree of complexity. So when someone passes away, the matter goes to the court, and this is where you have a lengthy and complex court procedure. This is where you can have an unfavorable distribution to different parties, family members, and of course, where there's money, there's always dispute. And eventually,
okay.
Yeah, please.
Sorry, Livin, just to ask a question. So if I understand properly, if we are owning the assets under our own name, there might be, in case something happens to us, there might be a very heavy process that would follow that event, right? And that would prevent our family from accessing and managing these assets right away.
Correct, yes. There are certain solutions that we have, and we'll talk about these, but essentially you could have a will, for example, and it's, again, the will always have to be, can be challenged, anything can be challenged, but the freezing of a family assets and businesses will happen anyway, with or without will. Yeah.
Yeah. So I just would like to give an example here. I had a call from a desperate woman that had lost her husband unexpectedly, as most of the times it happens, and she was desperate because the family account, the bank account, was actually frozen. So that's what happens, right, in case of someone passing away suddenly and leaving everything on his own name.
Correct. The process in UAE is very simple because you have 200 nationalities. You can't, and these people could just move funds outside. So within 2 hours of someone passing away, the bank account are frozen, and systematically until the probate happens, the government and the court needs to ensure that the assets are protected until that probate process is completed. And unfortunately for that lady in question, that includes the family bank account. And this is where you need to appeal to the court, and this is where you get into legal proceedings to be able to get those funds. Yeah.
Thank you.
Yeah. That's an issue but I mean, it's standard. As you get more wealthy and as you develop a certain type of tax exposure. And especially more so in UAE, as people, there's no personal tax here, but as they move around, marry around, and go and live elsewhere, they carry that wealth with them. So then they start getting exposed to different type of taxation, and that taxation could involve inheritance tax or tax on wealth, including wealth that you own in the UAE. So every time someone owns assets in the personal name, there is a calculation, of course, there's planning that needs to happen before that person move out. And that could be really a hurdle and a burden on life. I can't automatically move to France because I need to plan carefully before that. So these are the correct challenges that you have when you hold assets in your personal name, leading to no or very limited legacy plan because it's in your personal name. Yeah.
So if I understand well, Livin, if we're owning all the assets under our own name in the UAE and internationally, we need some tax planning exercise early enough in our lives to make sure that we are optimizing and protecting the assets in case something happens to us.
Correct. And it's not always easy to do this type of planification because you might not be able to relocate your family on time. You might not be able to take some opportunities in businesses or in career path rapidly because of that issue.
Thank you.
Okay. So these are the basically issues, and with that we have some graphic just to show exactly once an individual is compromised, businesses, estate, or liquidity investment held by the individual forms part of his or her estate and is also compromised in that sense.
Thank you, Levin, for this introduction on what we shouldn't be doing. I understand the risks relating to online structures now. Thank you so much. But for sure, there must be solutions to address these risks. And I think that's why we are here together today. Can you tell us what's the best solution?
I mean, yeah. So thanks. So we have a number of solutions that there are. The best solution will depend on the case by case, but ideally, we now talk about the foundation regime in general. So foundation regime, so these are the main features of a foundation. A foundation is a corporate vehicle, like a company, registered in a given jurisdiction. It is managed by... Yep.
Can I ask a question? Sorry. You say a foundation is like a corporation. Can you, because for us, when we hear legal entity, we understand LLC, limited liability company. Can you, for example, underline what's the difference between a foundation and an LLC when it comes to the structure of it?
Correct. So both LLC and a foundation are what we call legal entity. They are corporate. They have separate legal personality. We can enter into contract. We can own asset. So that's a concept of in terms of a legal entity. And this is in contrast to another regime that we have, trust. I don't want to confuse people, but just think of a foundation as a company for the time being. that are registered in a given jurisdiction.
Okay.
It is managed by a group of officers, just like directors, with typically the
Yes.
same duties as officers. Yeah.
Yeah. Can I ask again a question?
Yes,
Sorry.
please.
These officers, can they be family members? Are they professionals? Can they be both? How does it work?
So, depend on the jurisdiction. Sometimes there are certain conditions of who can be officers. For UAE specifically, there's no restrictions as such. As long as you're 18-year-old and surgery, so sound or mind, you can sit as a council member essentially. We'll talk specifically about UAE later on. These are it's a bit more generic. Of course, the foundation legally owns the asset. And the reason why we specified this is it is not acting as nominee or it's not acting as a trustee in the sense that the asset is fully registered to the foundation. And this is where it's,
If Sorry, if I may ask, if the assets are under the foundation instead of under my own name, as a family member, how do I benefit from these assets?
oh, great question. So, since the foundation doesn't have a shareholder, the only way you benefit is by being one of the beneficiaries of the foundation. So essentially, the objective of a private family foundation is to hold the asset, shares, investment, title deed, properties for the benefit of the beneficiaries. And these beneficiaries could be the founder, the family members, or anyone designated by the founder.
Thank you.
So again, because there's no shareholder, there's no legal claim, there's no owner per se of a foundation. So these are the five basic characteristics of any foundation around the world.
Thank you so much, Livin. I would like to ask another question at this stage of the presentation. I heard great things about foundations in very well established jurisdictions, but I guess there might be as well uh, ways to it. I mean, that regime might as well exist in the UAE, as you hinted. Can you tell us what does the UAE Foundation offer? What the regime in the UAE offers?
Sure, sure. So let me just go through the benefit of the foundation, and this is in line with the first slide when we discussed about issues of ownership, owning your personal name. So the foundation of UAE and in general protects the asset from protection from what? Anything that happens to the family members, death, incapacitation, bankruptcy. It will concern the family, but doesn't concern the asset itself. Uh, it's total privacy in terms of details of the beneficiaries, in terms of details of the founder. Those are not public information. You can set in a framework of governance detecting what are the powers of the council members, how they are elected, how they are removed, and on what they can vote specifically. And of course, most importantly, you can decide who receive what and when. So that succession planning includes any form of beneficiary that you can think of. So we have technically three types of beneficiaries that you could think of. You can have a fixed interest beneficiary, whereby you allocate a different asset to someone specific, where this amount is due to that person. You can have a discretionary beneficiary, so at the discretion of a foundation, typically the council members, or it could be prospective at the death of a founder, when she gets married, when he turns 30, so at specific events. So all this provides you for at least a legacy plan. And like you rightly mentioned, we have a number of different foundation regimes all over the world. Some well-established, the most popular one would be Liechtenstein. You have a Jersey one, you have a Cayman one. And to come back to your question about why UAE Foundation, these are basically the main reasons. It's the only wealth structure that can hold UAE real estate. You cannot use a Kenyan trust to hold Dubai real estate. You cannot use a Jersey foundation to hold Dubai real estate. It has to be a UAE foundation.
Yeah, I have a question at this stage, please. A lot of people are coming to the UAE and acquiring real estate to avail the golden visa, which is the 10-year residency in the UAE. If I have my golden visa under a given asset and I want to put that asset under a foundation, will my golden visa be cancelled? How does it work?
Correct, yes. So There's a couple of points here to clarify. Once your golden visa is on the merit of an investment, so the moment you give out the investment, typically your golden visa will be invalidated. So that's subject to certain conditions that when you purchase that real estate. We had a few making a few inquiries in front of our authority here to basically grant the golden visa on the merit of a foundation holding the real estate. While legally that sounds great, in practice we don't recommend this because essentially what you do is your golden visa is tagged to your foundation. Everywhere where you show your visa, you're essentially telling the world that you have a foundation, and that's in a breach of the privacy of the foundation. So we recommend our client basically to have your golden visa on the merit of either employment or a different asset, but eventually it's not linked to the foundation.
Very good point, actually, because that's cancels the work on the privacy side, right? The feature of privacy gets canceled. Then yes, that's a very good point.
And the other
Thank
part,
you.
if that facility is granted in terms of let's grant golden visa to foundations holding real estate, there is somewhere somehow in an authority here outside of DFC details that Anissa has a foundation and was granted visa. So you directly link that person to that foundation. Where that information goes afterwards, how it's used, yeah, that's an issue that we need to consider. So the foundation is a secular vehicle. So essentially, there's no religious rules applied to the foundation, and that's very important for our Muslim client, because in UAE under the personal status law, it's not possible for a Muslim to have a separate succession. I'm aware that there is a separate will in Abu Dhabi, but essentially, because the way the country works, is essentially the personal status law applies to everyone and more so to Muslims. So the only way essentially to have a succession outside of a personal status law is to put in place a foundation. Now,
can I ask a question, please, here?
Yep.
If I am a Muslim and I want to have a foundation, but I still want this foundation to be Sharia compliant, can it be done?
For sure. So the technical word that you just used now, Sharia compliant, mean different things to different people. So some of our clients are very happy not investing into haram products, basically anything that's only halal, anything that's Sharia compliant, that's on the investment profile only. So our client insists that the distribution follows Sharia code, probate, basically in terms of a Sharia location. So very bespoke. At the end of the day, think of the foundation as your own in-house succession tool that could be Sharia compliant. Yeah. We also have clients that went all the way through having a Sharia audit and a fatwa issued to ensure the foundation qualified completely as a Sharia compliant structure.
Okay, so we have all the choices.
Correct, yes.
When it comes to the secular. Okay, thank you.
And just on that point, may I remind, we have more than 5 school of thoughts when it comes to Sharia. So maybe the one that's applied by Dubai is not the one that you wish to apply for. So that's it. Enable these Muslims also to have their own sets of rules applied to them.
Yeah. Thank you.
So essentially the DFC Foundation has got what we call firewall provisions. So that's a technical terms to say that the DFC Foundation is only subject to DFC court order. So foreign court orders issued by anyone outside of the UAE will be ignored by the DFC court. So where this gets interesting is that we are more than 200 nationalities here. As long as we own that foreign passport, we are subject to our foreign law. Maybe that could include in case of divorce, that could include bankruptcy or anything happening in your home jurisdiction. So
can I give a specific example just to see if I understand it correctly? So for example, my father lives in France. I have a French passport. He brings part of his money to the UAE. He acquires a real estate asset. He puts it under a foundation, and I am the beneficiary. And God forbid something happens to my dad. What you're saying is that the French court cannot do anything about this situation, that this asset will come to me even if my dad has other beneficiaries, or even if the will in France dictates a different rule?
Correct. So, I mean, there are certain conditions and then caveat to it, but essentially, the French court can issue any court order that they want. The DFC court will just ignore that. If there is any challenge, it has to be brought under DFC law in DFC court against the foundation.
Okay, and that applies to any country. So
That
from
applies to
Nigeria, if the court tries to
correct, yes.
cancel the foundation or add beneficiaries or whatever, it cannot work.
No, it cannot work. So now, of course, there are certain conditions where if you lodge your case here and you win the case in the DFC court, of course, that will work. But essentially, those challengers, and the one that you mentioned here is inheritance, there is a further mention in the law about this, but these foreign heirship rules do not apply here. So, we also have migration provision. So, like we said, you set up a structure, you put investment, you spend some time and effort to finalize the bylaws and how it works. And tomorrow, the children want it to be in Jersey. Tomorrow, the children, Dubai doesn't work for you for whatever reason. Tax on foundation is too high, or legally speaking, it doesn't make any sense. So we have this migration provision, which is the same as redomiciliation of a company. So you basically redomicile the foundation from UAE to another jurisdiction, where either with a better tax regime or for practical reason, you want it to be closer to you or further from Dubai. It doesn't matter. So these provisions are there, but basically tells our client, you're not stuck in Dubai. Right now, we have...
And vice versa as well?
Correct.
For example, I have a client, he has two family foundations in Lebanon. And with the situation in Lebanon, he wants to move these foundations away from Lebanon. So what you're saying is that he doesn't need to unwind them and create a new foundation here. He can just translate them.
Correct. So transferring of asset typically from foundation A to foundation B might trigger some transfer fees, some capital gain, which then result in capital gain tax. And then sometimes people want to maintain the history of their structure for legal reason, for tax reason, or for practical reasons. So by doing that migration, you maintain the history of a structure, and you stop, you prevent from all this capital gain and transfer fees from happening. So yes, Lebanon in your case have migration provisions, and you manage to get an approval to migrate the structure, it can migrate directly into DFC as a DFC foundation. Technically, we call it continuance, and thereby hold an asset. Yeah.
Thank you.
This is where it gets interesting. We have two common law provisions in the UAE. So think of it as a jurisdiction within jurisdiction. So in that common law free zone, DFC and also ADGM, we have our code system and rules based on common law, English common law. So the foundation itself is what we call civil law construct. So you get the certainty of your documents. What you wrote there, this is what will apply. But you can always ask the DFC court for guidance basically because under common law you have a little bit more flexibility how it works. So you have a flexibility of the common law with a certainty of civil law. Yeah. So that's what makes the foundation of DFC and ADGM a common law foundation.
I would like to refocus a little bit on this point because I don't think there are many jurisdictions where you have actually two laws. So just to reconfirm that in the UAE, you have the civil law that may apply in certain cases, the common law that may apply in other cases. And if I understand well your point, Livin, you're saying that in the case of the UAE Foundation, we get the best of both worlds.
Correct.
Is that right?
Correct. So just not to go into a history of civil law and common law, but essentially civil law provides you certainty until if I wrote it down and I tell you this is what you need to do, this is what will happen. Whereby common law, until I tell you that you can't do something, you can do it. So that's why, for a number of reasons, historically, businesses tend to be more fruitful and successful in common law jurisdiction because it encourages innovation. So what the UAE has done is we are a civil law structure, jurisdiction, so we need a civil law structure to hold asset, that's foundation. But we appreciate the peculiarity and the simplicity and flexibility of common law, so you can have it in the DFC.
Livin, I'm interrupting you because I have a good question from the audience. Nabil Lahar, CFA managing partner in OMEI Fund and Co-Investment. He's asking, how easy is it to get gearing against UAE real estate in a foundation? Is it easy to leverage a foundation?
So, so before I answer that part, let me just, from a practical side, the foundation is not a speculative vehicle. You don't want to put your foundation in legal arrangement itself. So that gearing will happen by a company held by the foundation. So, and then to answer your question, yes, a foundation and a holding company holding asset can get leverage. The real issue is, do UAE bank have appetite to provide for this? And the system that we are aware here is in UAE is banks are, not to insult anyone, quite slow in upgrading their system. So the system of most banks here, I would say 90% of banks here, do not even have foundation as a probable to offer mortgage or any form of financing facility. Not that it's not legal, it's just that the system needs to be upgraded. But I'm aware of a number of different banks that have already provided funding against assets held by the foundation.
Perfect. Thank you so much. We can go to the next part.
Okay, so yeah. So
I think I would like to then now move to the next stage, which is understanding what a typical UAE foundation structure looks like. What is the process and the timeline? What are the costs that are involved into setting up a foundation? And what do you require from our listeners, our clients, to get started with their foundation?
Okay, that's okay. Let me take one by one. So typical structure of a foundation, and these other parties, is the individual that sign the charter and the bylaws. So by doing so, that individual is a founder. He found the foundation. The charter and the bylaws basically put the operation part of whatever the foundation needs to is managed by the council, who protects the assets of the foundation, the guardian, and who benefits from the foundation. So these are the documents that needs to be put in place. And just before I go further about what do we need from them, essentially under DFC, source of fund and wealth, identity of all these parties here. So these are the duties of us as a corporate service provider that we need to comply with. And of course, if there are some complexities when it comes to the charter and the bylaws and some bespoke provisions, ideally a law firm to basically draft those charter and the bylaws. There might be also some tax. There might be also some tax implication. So especially if the assets that are transferred are based outside of UAE.
I just want to ask a series of questions now, but I will ask them one by one. Under the founder, who can be the founder? You started by an individual. However, if I understand well, my best friend and I, if we want to set up a foundation together, we could, right?
You could, yes. So any legal person, including the company, including another foundation, could be a founder. What we found out, though, is the issue arises with the banks. If you put a corporate founder or you put a foundation or even a trust or any form of legal arrangement here as founder, you have an issue when it comes to the bank account opening. And this is why we tend to shy away from this type of structuring. It makes more sense to have an individual acting as founder or founders.
Okay. And regarding the different stakeholders you've been mentioning, so the council, the guardian, the beneficiary, if you can just go one step back, and that's a question I have from the audience, to describe what's the council and who are the members of the council and what are their rights, the role, the responsibility. Same for the guardian and then for the beneficiaries, please.
Correct. Okay. So the foundation law, both of DFC and ADGM, it's not more than 40 pages. It doesn't provide much in terms of what can be done. The structure is very bespoke. So the founder could or could not have any form of rights. If a founder reserves certain rights, we call that reserve rights. So those rights could include shutting down the foundation, appointing or removing council, guardian, or beneficiaries, and also modifying the charter and bylaws. The council, that's your management, right? That's your board of directors. In the AFC and in the DGM, anyone can be a council member. Uh, of course, we always recommend that the majority are UAE resident to ensure that the whole structure is controlled and managed from UAE from a tax perspective. And of course, the guardian, the law provides that the guardian has got information right, but through the bylaws, you can beef up that type of power. So depending on the profile of the founder, depending on the dynamics of the family, you will have a share of power and rights spread across these three parties.
And the governance I will, as a founder, dictate it through the charters and the bylaws.
Correct, yes. You could decide as a founder that you don't want to be part of the structure at all, and you're not there. You just want to reserve certain powers. You could decide that you want to be on the council on the day-to-day. In this case, you will not be able to be a guardian. You might not need a guardian also. You might decide you are the founder, but somebody else is the guardian, a best friend, a family member, a law firm, your choice. Yeah. Again, very bespoke, depending on family members. Yeah.
Okay, I have a question. If there is another asset that is not under the founder and we want to contribute that asset to the foundation, is this something possible?
Correct. So anyone can contribute into a foundation. I always say anyone, but it's always subject to what we call AML and CFT, anti-money laundering rules. So we need to understand what's the relationship with the family, and of course, source of fund and wealth of asset.
Thank you.
Yeah. And of course, upon the demise of the founder, the structure itself doesn't change unless in the charter and bylaws, the death of a founder is what we call a triggering event.
Super. I'm having a lot of questions. Shall we, Livin, do you want us to move to the next section,
Yeah.
Q&A, or you
Yep,
want
Q&A, yeah,
to wrap
that's
up
about
on? Yeah,
it.
good. Okay.
Yep.
So, Cheyenne, I'll just
Hi.
take over, I think.
Thank you, Anissa and Livin, for this insightful discussion. So now we will open the floor for the questions. We see many, many questions already in their inquiries. If you haven't already, please drop them in the chat. We'll address them as many as possible. If we don't get your questions today, don't worry. We'll get back to you by email with a response. Anissa, over to you on the questions. So I believe we have one right here from Mozambique.
Yes. Yes. So, living in Mozambique, when you pass away, God forbid, all your children, including those born outside of marriage, have the legal right to inherit your assets. If you own real estate in Dubai under a UAE foundation, does this structure allow you to control your inheritance?
Yeah, confirmed. So I'm smiling because I also have the same rules in my country. So you can't disinherit your children in my country also. So, but the court case will happen, whatever probate will happen in Mozambique, and it will come to UAE, and the DFC court will just ignore it because you can have any form of inheritance. The foundation is the one owning the asset. That's directly to the firewall provision that I've mentioned before, and that's also directly to the bespoke succession planning that you can have within the foundation. So no, your children will not have any form of challenge against the foundation or claim.
So you can choose. So you can choose exactly who would inherit, whether you want them all to inherit or you want some of them to inherit. You can choose exactly who inherits and who doesn't.
Correct, yes. There are some caveats. I wish I could say yes or no, but these are legal matters. There are some caveats depending where the asset. In this case, it's UAE real estate, so quite easy. It's in the foundation. But if those assets were in Mozambique, that would be another question. And of course, there are also questions in terms of the capacity of the founder, when it was done, how it was done. So these are part where we need to ensure when the structure is done, it's done properly at the start.
Yeah, so we need to anticipate all these points when we are structuring the foundation in the UAE to ensure that the founder's wishes are respected.
Correct, yes. Yeah.
Exactly. I have a lot of questions reaching us regarding taxes. Um,
Yes.
so,
Yeah.
when should the UAE Foundation consider applying to the FTA to be treated as an unincorporated partnership for tax purposes?
Yeah.
Maybe
Okay.
this will leave it
Yeah.
for our tax advisors, or leaving you want to say something about the taxes.
I can add a few lines. Just full disclaimer: I'm not a tax advisor. I don't pretend to know everything on the tax code of UAE, but essentially, the foundation can apply for what you call a transparency. So what we're talking about here is the family foundation exemption, and it basically you tell FTA don't tax the foundation itself, tax the benefit at the end of the beneficiaries. And since in UAE beneficiaries do not have personal tax, individuals do not have personal tax, then there is no taxation. When you should do that is essentially when you have, I would think, real estate, any income that is taxed at the level of a foundation. And you should be careful doing that because once you do that, you can't go back as being a tax resident foundation. Um, this would mean that if your beneficiaries are no more UAE resident, that information might flow to UK. That information might flow to wherever they are. The second part is, do you really want FTA to know who are the beneficiaries of your foundation? How confident are you that this information will stay there? So sometimes it's worth paying that 9%, but having everything stuck safe in the IFC. Yeah.
Thank you, Living. Nabil, we will also ask our tax advisors to develop on this point, and we will send it to you by email after the webinar. I have another question that came from the live LinkedIn. Setting up UA foundations with existing African real estate assets, what are the requirements and the tax implications? So, can a UA foundation own African real estate assets?
Correct. So, yeah. So we've done that already. So from the UA perspective, both the IFC and ADGM was regime, and even RAC ICC, there is no restrictions what it can own. The first step is checking in the country whether the foundation is recognized as a structure to hold the asset. Typically, we don't like our foundation to own asset directly. We'll have a holding structure in between, either based in Dubai or based in the home country. The next stage is to check what are the tax and legal implication in the home country of owning this asset. Uh, Clients like to have what we call gifting, transferring directly, but gifting leave a trace because you know it was yours and it's not yours anymore afterwards. So it opens up to some challenges. Sometimes you might consider acquiring it, paying your transfer fee, paying your full transfer fee and taxation on the transfer asset, what we call a bona purchase acquisition, so that you don't have to talk about the gifting anymore. So these are the considerations that we need to look at before we acquire this asset in your foundation.
Thank you so much. There's a question that just came from Johar and Ketil, but I think we already addressed that point. Maybe just quickly to remind everybody, can the founders be in the council as well? I think the answer is yes.
The answer is yes. Again, there are considerations to check whether this exposes you to any form of challenge, both from a tax part or from a legal part. Like you were managing the asset all the time. You were never really wanted to have a foundation in the first place. So, yeah.
Yeah. It may also jeopardize the privacy because are the council members' name disclosed?
They're not disclosed, but the council members are the one that sign resolution. So essentially, then anything that you do, opening a bank account, any contract, anything that's signed, these are the names of the council members that will be out there.
Okay. So would you suggest that it's for the privacy side of things it's better not to
Yeah.
have the founder in the council?
Yeah. So it's always case by case.
Many
Is how, yeah, there is a balance between, because you might not want as a founder to have other parties involved in your statement, but it also involves what's your tax position, from where you're doing that, um, and how risky doing that. So what I mean by risky is if you are exposed to certain business transactions where people can come after you for as a businessman for a legal claim. You might not want to put your name out there as council member. Yeah.
Thank you. Levin, I'm having questions regarding the costs of setting up a foundation compared to an operating company, an LLC. Any idea on that?
So a ballpark figure of a foundation will be about 20,000 USD annually, but that will depend also the type of scope, the support that you require. But that's typically the average price of a foundation in UAE.
And would you say there is a minimum wealth to place under the foundation to make it, let's say, not profitable, but that the whole setup makes sense?
I mean, I think technically anyone with some 1.5 to 2 million USD worth of asset should consider a foundation. There is no minimum per se. You don't need to have this type of wealth. Some foundations are set up just for a couple of years for a particular asset, but it doesn't have to be this way. Yeah.
Okay. Levin, again, more questions. Wills versus foundations. How does it work? Why someone that is not subject to the Sharia and could establish, for example, a DFC will or a Dubai court will, why would he rather go for foundations in the case of real estate assets being held?
Will is a wonderful tool, and everyone should have a will. But will should be for practical asset. Will not protect you from bankruptcy. Will not protect you from incapacitation, from any form of freezing of your asset. A will is a one-purpose tool. It's only at the time of death, and it's also going through the probate part. So have a will for your practical asset. So what I mean by practical asset, you need a personal bank account for personal credit card. You need a personal bank account to receive your salary. So there are certain assets that still have to be in your name, but it's not practical to remove it. Have that will for that. Anything major investment, real estate should be parked under a foundation. So it's not will versus foundation, it's will and foundation. Both should go together. Yeah.
Thank you so much, Levin. One more question on hiba. What is hiba and why? And is it some like I think it's a gifting process. Can a founder gift his assets to the foundation? And what would be the pros and cons?
Correct. So the IBA is a civil gift. So essentially, the Dubai Land Department allows you to transfer as a founder to your own foundation if you own the title deed of a property, and transfer at a reduced rate of 0.1 to 5%. So typically, the transfer fee between the real estate parties is 4%. So here you get a reduced fee. And the reason why you want that is, of course, no one is happy paying 4% transfer fee. But it's also to encourage people to use the foundation and gift that. Yeah.
Okay. And the cons, because I think you mentioned the cons during the presentation, which is the privacy part.
Yeah. I lost you there. Coming in? Yeah.
I was saying that during the presentation, you mentioned that hiba could involve knowing who made the gift,
Oh, yes.
hence could jeopardize the privacy.
Correct. Yes. Correct. Yeah. So
Better paying 5%, 4%, sorry.
Depending on how you want to structure the transfer of asset. So the transfer asset could be done as a gift, like in your case, like a hiba, or it could be done as a bona purchase transaction, whereby the foundation pays the full 4% fee, the full consideration. And this is essentially during transaction where there is a risk of challenge. Challenge from whom? From your heirs, from any other party that said that you transfer this asset to default them. So this is where you structure the transaction as a sale, basically, and pay the full percent.
Perfect. Okay, thank you so much. There is a last topic that is coming in the question, so I'm going to try and group it under a single question. Foundation for philanthropic purposes.
Yeah.
Can we set up a UAE foundation for philanthropic purposes? What would be the difference in the setup from a business or a family foundation?
Correct. It will operate the same way. Both ADGM and DFC provide for what we call charitable foundation. But just on the point of that, There's no need for the foundation itself to be declared as charitable if the motive is just to distribute or just to have a one-time or annual distribution to a charity. So coming back now, both foundation regime, DFC and AGM, offer a charitable framework whereby your foundation is set up for collecting grants or donors and for distributing for specific charitable. But just one thing, you need also to get registered on the local market with authorities here as you're operating as a charity. Having said that, you have a number of ways of structuring the foundation for philanthropic motives without actually being a charitable foundation. You could set 10% of all benefit every year specific for a charitable motive within the foundation. You could set standard criteria for children. Every beneficiary, if they want to receive, should do at least a number of hours of communities services or specific. You could also specify for your investment mandate specific impact investment sectors that we want as a family. We want to invest into ESG. We want to invest into restart. So there are ways of doing a number of philanthropic endeavors without actually going through a full label of being a charitable foundation.
Super. Thank you so much, Livin, for so much expertise given to myself and to the audience. I, on my side, don't have any more questions from the audience. Would you want to add anything else, Livin?
I don't know, maybe we should have started with that. This is just an introduction of foundation regime for Africans. And the reason we wanted to gear that conversation towards Africans is in terms of regime, there is no such thing on the local market, on the African soil in terms of asset protection. And this is something quite new, asking people to move the asset from their patrimony into a structure. And you will typically choose a jurisdiction where you either already have investment or you're comfortable with. And that's where UAE and Dubai tick the box of those. Yeah.
So it's a good tool that's a recent and great tool for African families to structure their wealth, consolidate it, and prepare for the transmission to the next generation.
Correct. Yeah.
Thank you so much, Livin. On this, I think we are done with the questions, so I will invite Cheyenne back into the conversation.
Thank you so much, Anissa and Livin. I think this was a very great webinar session. We hope that the discussion has proved valuable insights on how African families can secure their wealth and legacy through structured planning in the UAE. Next would be for further guidance, you can reach out to us, to our team at Dawia Family Office.
I just would like to thank our audience for listening to us today, and I would like to remind them what we do at Dawia Family Office. Of course, we invite experts as Livin to come and tell you more about specific products, and that falls under the services we are offering to affluent African families that are very well established back home and that are looking for expansion, internationalization, expansion, and consolidation of their assets, and of course transmission of these assets to the next generation, which we call in one word in English legacy, preparing their legacy. The foundation would fall under the governance section of our services, where we would help you structure the best foundation for your needs, depending on what are your personal needs, the family needs, and your plans for the future. If you want to hear more about foundation or any other topic stated here, please do not hesitate to reach out to us. Thank you, Cheyenne, and thank you, Livin.
Thank you. Thank you very much for the team. Thanks. Yeah.
Thank you all.